Hello and welcome to Livewire Markets. My name is Chris Conway. Today I'm sitting down with Adam DeSanctis from Vanguard. Adam is the head of ETF Capital Markets for Vanguard Australia, and he's going to be talking to us about the Diversified ETF range. Adam, thanks so much for sitting down with Livewire today.
Thanks, Chris. It's great to be here.
Adam, just set the scene for me a little bit. Can you talk to me about what diversified ETFs are and then, of course, why Vanguard created them?
Absolutely. Diversified ETFs are multi-asset portfolios that give investors access to both equities as well as fixed interest wrapped up all in one solution. The example that I like to use when describing these funds to clients is that of a multivitamin. Instead of going out and purchasing 10, 15 different vitamins from the store, it can be a lot easier to just purchase a multivitamin and take one pill. Same idea here, but for your investment portfolio. Instead of going out and selecting and managing a whole portfolio of funds, you can get all that exposure with one single trade. And to answer the second part of your question, Chris, about why did Vanguard create these funds? To make investing simple. Investing for a lot of investors can feel complex and complicated at times. So what we did was we created these funds not only for investors that are early on in their investing journey, but they can also be used for investors who are a bit more seasoned. And just one last thing, when we launched these funds, they were quite innovative, and they still remain quite innovative in the market today. I think sometimes innovation headlines are dominated by the AIs and blockchains, and those certainly are innovative. But when we think about innovation at Vanguard, it's how can we simplify the investing process for our clients? And that's what I think these products do a really great job of.
Yeah. Adam, I want to pull on that thread there. So you touched on it already, but the problems that these products solve for investors. So one is complexity and the other one is simplicity. But just talk to me a little bit more about what that looks like in practice.
Yeah. One of the overarching goals for any investor is how do we maximize returns while minimizing portfolio volatility? And there's three things that typically investors suffer from that get in the way of that. So the first is diversification. Instead of building a portfolio from scratch, what these products offer is exposure to thousands of securities across not only equities and fixed interest, but also international and domestic markets. And that can really help on minimizing portfolio volatility. The second one is discipline. With these products, they have an automatic rebalance function that brings the target weights back in line whenever you experience market moves. And that's a big one for investors because it prevents them from performance chasing or maybe wanting to make tweaks when there are market downturns. So that's a really important feature of the products. And then lastly is home country bias. Investors all over the world, not just here in Australia, tend to suffer from home country bias, which is investing in securities that they're more familiar with in their local market. And as I said before, the global exposure here really helps to offer diversification. And as we've seen over the last couple of years, the international exposure has helped from a return perspective as well.
Yeah. As someone who tinkers myself, Adam, this sounds like the product for me, but we'll park that for the moment. So I just wanted to understand in terms of research and feedback that you got from investors, because of course you don't create these products in a vacuum. So what was the feedback from investors and advisors when creating these ETFs? And then how has the reception been from those groups as well?
When you think about these funds, we like to say it's Vanguard's 50 years of investment experience distilled down into one solution. And so for many years, the investment principles of Vanguard, so clear goals, balance, low cost, as well as discipline, have all resonated with investors. But in terms of implementing those characteristics into a portfolio, investors weren't quite always sure how to do that. Yeah. And so what we did was we created these products that are living, breathing, and you can invest money in them, and they help to encompass all those investment principles. If you think about the journey, we started off with 4 products ranging from conservative all the way up to our high growth. And then from there we evolved. I vividly remember this year and last year talking to investors and advisors on the road all around Australia, and they were asking for a product that was all growth. So they wanted to see a diversified fund that offered exposure to 100% equities. And so our product team and our investment strategy team went to work, and we launched that product earlier this year. And I think it's just a great example of Vanguard listening to the market and then being able to leverage our resources to put out a solution that meets investors' needs. And we'll continue to do that with the suite as and when we see opportunities to grow the lineup.
Adam, we've been through a volatile 2025. The volatility was perhaps at its highest in April earlier this year. Happened to be the time when two of the new diversified ETFs were launched. So it was the Vanguard Diversified All Growth Index ETF, which is VDAL, of course, and the Vanguard Diversified Income ETF, VDIF. So I just wanted to understand, how have they performed through that baptism of fire? And then perhaps more importantly, how do you expect them to perform during periods of volatility like we've seen?
Volatility brings into focus two things: investment performance and investor behavior. So on the investment performance side, these products largely performed how we would have expected them through the volatility. So on the two extremes, if you were to look at the all growth product, that experienced a significant pullback and then a pretty significant rebound on the other side. And then on the conservative side, that product that has more exposure to fixed interest didn't experience as large of a pullback, but the rebound was also more muted. So overall, they performed how they were designed to. The most important thing for investors to take away from this conversation about the diversified funds is how critical it is to be in the right risk profile, especially during times of volatility. So I'll give an example of our all growth product. During the volatility, in just 1 week, VDAL was down as much as 10% in a week, and then from there, it surged about 23% through the end of last week. And so if you had an investor who was unable to stomach the volatility and move to cash right before the rebound, it wouldn't have been a great experience for that investor. And so there's a lesson in there to make sure that you do the homework and the due diligence to get into the right product that you'll be able to stick with longer term. And then the second part there, Chris, is on the investor behavior. What we saw during the volatility was actually net positive cash flow into the diversified funds, which means that the numbers suggest that investors were not selling, and in fact, they were adding more money over that time period. And so we talk in theory about how these products can help investors stay the course, and it's great to see the numbers actually supporting that as well in terms of investor behavior.
Adam, you talked about some of the outcomes, but what are the features of the products that help during those periods of heightened volatility?
Yeah, I think the big one here is diversification. And you've heard me mention it before, and I'll probably mention it again. It's such a core tenet of long-term investing. There's a really good quote from our founder, Vanguard's founder, Jack Bogle, and it is, "Don't try to find the needle in the haystack, just buy the whole haystack." Yeah. And I love that quote, and I think it's during times of volatility where it's really important to keep that in mind, because instead of trying to pick the one stock that is going to outperform the market, you're better off getting broad market exposure, and you don't have to worry about missing out. Just to extend the analogy even further too, for the diversified products, you're actually purchasing into multiple haystacks across equities, fixed interest, and then also internationally and domestically. So yeah, it's a really important idea for investors to keep in mind, like I said, especially during times of volatility.
Adam, talk to me about some of the other key features and benefits of the diversified ETFs. And here's the million-dollar question. Why would investors choose the diversified range as opposed to other ETFs that are on offer?
I'll break this question into two different investor cohorts. So I'll start with retail, and then I'll talk a little bit about the financial advisors. So when we think about retail clients, there's really two main points. First, there are close to 400 ETFs listed on the ASX today. That is a lot of choice. And for many investors who are just starting off on their journey, they're not quite sure where to start. So these products can be a really great starting point. In addition to that, it's the low cost component of this as well. Some of these products have close to 14,000 securities in them. Can you imagine as an investor going out and trying to purchase all these securities across the globe? It would be a daunting task. And so what you get in this product as a retail client is access to all of those securities, and you get to leverage the scale that Vanguard's investment management team brings in terms of lowering cost to do that. And secondly, that benefit does actually carry over to the financial advisors as well, but there's a few additional items that I'd also mention. These products do the heavy lifting when it comes to asset allocation. And in addition to that, there's probably three things I'd mention. The first is they're very easy for financial advisors to explain to clients. There's no outsized volatility that you might experience with other products. So those questions coming from clients about why all the portfolio volatility, it's a bit easier to explain that. And then lastly, it provides more time for advisors to spend with their clients doing value add things as opposed to focusing on asset allocation and rebalancing.
So Adam, you talked there a little bit about why people might choose them. What role do these products play in investors' portfolios? Like, where do they sit in the grand scheme of things?
I like to describe the products as being very versatile. I'll focus in though on the two most common ways that we typically think about fitting these into portfolios. The first is, as a standalone portfolio, purchase a diversified ETF, and that is it. You don't need to add anything else because most of your portfolio will be low cost and it'll be well diversified, even though it's just one line item in the brokerage account. So it can operate perfectly well as a standalone portfolio. On the other side, for investors that maybe want to be a little bit more hands-on, we like to talk about a core satellite strategy that you can use. So usually the way that would work is you would use a diversified ETF as the core of the portfolio. It's going to help to keep the overall cost of the portfolio low. And then around that, you can add small satellites of other things that you might want to invest in. Where this actually works really nice is for clients that might not be able to stick to just the portfolio that has the diversified in there, and they maybe feel like they're missing out on like some of the other things going on in the market. So you can add some of those smaller satellite positions without compromising the low cost and diversification of the portfolio, more broadly speaking. And the most important thing is building a portfolio that a client will stick to over the long term, and sometimes that strategy can help with that.
No doubt. Adam, thank you so much for sitting down with Livewire and taking us through that.
Always a pleasure. Thanks, Chris.
If you enjoyed that interview, make sure to give it a like and don't forget to follow our YouTube channel. We're adding lots of great content every single week.